been managing option-based portfolios for over 20 years. And so that's where we turned, was to, having a conservative option overlay approach to getting that income, reducing downside risk. And then now we're able to, combine two concepts you don't normally see, which is NASDAQ 100 growth-like exposure with income and less risk.
You said the word conservative, but a lot of people hear options, they think risk, right? Yeah. They're very, and especially when you're starting to throw, 10, 11, 12% yield in their face, they're going, well, I've only ever been told high yield equals more risk. So what should investors know about, as you mentioned, trying to keep risk down in a fund like this? How are these yields possible with mitigating certain levels of risk?
It's a great point. And because the space is growing so fast, it can be hard to parse through all the different strategies that are out there to understand the design details and which ones truly are conservative. So I think a simple way to think about this is, number one, no leverage. Everything we do for QQA, fully covered, fully collateralized positions, structurally defensive. So we're built to outperform in down markets. That's what we saw relative to the NASDAQ 100 during April, when we had a very sharp drawdown, obviously. So conservative starts with no leverage. Then there are other design details that are important as well to make sure that you're not taking on too much path dependency. So laddering the option overlay is really important too. And then having that balance of defensiveness with upside potential is really key as well for these types of strategies.
Now, you said that this is designed to withstand those pullbacks in the market, the bear markets, if you will. I hear that and I immediately go, there's no way. Like, stocks are going down, the yield has to come down. How is it that you can still produce the same level of yield in no matter what market?
The yield is being derived from option premiums, and option premiums tend to go up when markets fall. They actually get juicier and larger typically when volatility picks up. But we've designed our strategy such that the yield actually does not fluctuate with the level of market volatility.